Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a genuine investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, but do take into account losses. So for further details about how to join us for little as $9 a month or less than $9 a month, information is available in the description below. In the previous video I did an important update on MMTLP and the focus was on the new 8K filing, so please refer back to the previous video for that very important update. In today's video we're going to be looking at all things legal, so stay tuned for that. We're going to be looking at potentially 10 legal problems that the brokers may have, the hedge funds have, and certainly FINRA could have. So we'll have a look at those shortly, but let's start by having a look at what's happening in the markets today. So headline here from Yahoo Finance, there is some good news today, and we can see here that US stocks are charged higher today, so I'm sure you'll be seeing a lot of green in the market. The S&P right now at time of editing is up 1.5%. Dow Jones is up nearly 300 points. So let's finish off by having a look at the heat map, and we can see here an almost consistent area of green in all sections. So Microsoft up nicely, Apple up, Google up, and more importantly for many people watching Tesla, great day today after significant decline in the stock, up close to 8.45%. And this is one of the reasons why it goes to show that the best days to buy in the stock market are on the very significant red days. What now I'd like to go through is 10 potential legal issues facing brokers, hedge funds and also FINRA. So these are potentially things that I think certainly the authorities and the market makers could get into trouble with. So let's have a look at first of all from the top. One, I think there has been, in our case certainly, an unlawful restraint on trade. So who's responsible for that? I think obviously the brokers will say it's FINRA, and FINRA will obviously say it was the U3 halt. So that's something that we were denied obviously a fair opportunity to carry out a trade. So number one is something that we certainly have a problem with. Number two, obviously we know there is a big problem in the market, not only with MMTLP but many other stocks, and that is obviously naked short selling. So shout out here to Gator 8373, who's also copied in Metamaterial News and stated naked short selling is legal, stand up and do the right thing. So the SEC would like them to look at this, would like the Department of Justice to look at it, would like the brokers to look at it, but because this is causing a significant problem for honest, law-abiding, tax-paying citizens and investors, and obviously it is also destroying companies. Number three, I think, is something very important, and that is negligence and duty of care. And I think the responsibility here lies with brokers. I think brokers have not been honest and transparent in some of their messages, some of the communication, especially with regard to are the shares synthetic, are they real, when are we going to get our next Bridge Hydrocarbons shares, are the shorts covering? So lots and lots of allegations of negligence and duty of care. We're looking at a breach of this. Number four, I think is very important, raised by a number of people, including Tony from Market Moves, and that is hedge funds and shorts not paying tax due to positions not closed. And if any law-abiding citizen were not to pay tax, I'm sure the government would be on the case immediately. So again, if it's a problem with tax, then this needs to be dealt with, and these organizations, brokers, hedge funds, shorts, whoever they are, if they have not closed their positions, does that exempt them from tax? Is this a loophole? Is this something that needs to be dealt with? And every single honest retail trading investor would like this to be dealt with, and obviously something to be done about it. And number five, misrepresentation. I think we're looking at a legal duty to provide an honest assessment of your trades. Are they synthetic? So this is a problem that many honest retail investors have had from the brokers. I think allegations of misrepresentation in some cases could be valid. So brokers need to be very careful what they say. If they are misrepresenting information and providing this misrepresented information to obviously their clients, which would be us, then that would create legal implications. So the general rule for everybody is, if your broker gives you any information, try and get a record of it. Screenshots are also useful as well. Let's now have a look at number 6. So number 6 is a very serious allegation, and that is an allegation of fraud. So those who deceive about the intention to deliver securities in time for settlement, and we're looking at here broker rule 10b21. So let's have a look at this rule. So under the main heading here, selling short stock without having located stock for delivery at settlement and failing to deliver shares at the time of settlement. What we're seeing here in rule 10BA, section 21, referred to as the naked short selling. Those who deceive about their intention or ability to deliver securities in time for settlement are committing fraud in violation of Rule 10b21 when they fail to deliver securities by the settlement. So very, very serious allegations here, and this is another thing that we would like certainly some investigation to be carried out for. So let's move on to number 7. We're looking at SEC Rule 203B, failure to deliver, and I think this is obviously on the head of the brokers. So let's have a look at this rule 203B. We can see here, if you have a look at the screen, then obviously the clearing agency, which we're going to refer to as the broker, must immediately purchase shares to close out failures to deliver in securities with large and persistent failures to deliver. If failures to deliver persist for 13 consecutive settlement days, then obviously there is a serious legal consequence there, and we can see, of whatever reason a participant or a registered clearing agency has failed to deliver position at a registered clearing agency for 13 consecutive days, the requirement to close out positions under Rule 203B remains in effect. So basically we have seen this rule not applied. So this rule should have been applied, but it's not applied, so we would like a clear and transparent answer. Number 8, let's go back here. So it's SEC Rule 204, closeout requirements. Hedge funds and brokers, I believe, may be responsible and liable for this one. So let's have a look at the rule here. It says closeout requirement Rule 204 requires brokers and dealers that are participants of a registered clearing agents to take action to close out failure to deliver positions. Closing out requires a broker dealer to purchase, borrow securities of like kind and quantity. They must close out the failure to deliver for a short sale transaction by no later than the beginning of the regular trading hours on the settlement date following the settlement date. So basically in our case, none of this happened. The brokers did not enforce any situations with enforcing the shorts to close their positions. Brokers did not close on their behalf, and contrary to this situation, what we saw on the last trading day was significant synthetic shares used to drive the price down, I think around about $2.90. So what this basically indicates is that nobody was selling. I mean, who in their right mind is going to sell for $3, $4, for $5? Not a single person I know would sell at that price. So what's going on? And then number 9, I think this is a rule certainly in Europe, in the United Kingdom, and it's probably also the same in the United States, and that is just a simple contract, breach of contract. So a contract is a legally binding agreement between two parties. So we, as the retail investor, the brokers, our contract, our legally binding contract is with them. We pay them money, they deliver a service, we did not receive the service. Full stop. Breach of contract, full stop. Let's have an investigation. So the contract that we agreed, it was not delivered. And then the final one, number 10, conflicts of interest. I think this is a very, very serious allegation here. Conflicts of interest with the FINRA board members and hedge funds who allegedly created MMTLP using falsified documents. Now, he's not on, if we're looking at Mr. Ari, he was not on the main FINRA board, but he was on one of the marketing boards for FINRA, and on his profile it states that he does work very closely with FINRA. So I'm sure he's very honest about that particular thing. So I'm quite agree with him when he said he works very closely with FINRA, and that is the problem that I have and everybody else has. So hedge funds, he was also allegedly part of a hedge fund that created MMTLP, again allegedly using falsified documents. So we need an investigation in that, because this whole thing is a complete mess. So we've got the 10 legal issues that I've suggested here, and all of these have been just basically put in the bin with a U3 halt. What I'd now like to do is provide some clarification with regard to one of my tweets that I posted yesterday, and this was quite divisive, so let me try and explain the intentions behind it. So first of all, in the tweet, what I stated yesterday is again with regard to what happened at the bottom. If you see what's happening with regard to FTX, the customers have filed a class action lawsuit against FTX and Sam Bankman-Fried, seeking a declaration that the company's holdings of digital assets belong to the customers. And having carried out some research, I also saw that there was a case with Enron. Now, obviously, I take it that people, the victims of the Enron situation, did not get all of their investment return. So, and obviously that probably was unlikely anyway. But what I suggested here is, if investors can contribute, let's say for example $15 each, we have the legal right to file the largest class action in trading history. Enron shareholders did this. We will wait for, and then this is the most important part of the tweet, we will wait for any behind the scenes negotiations before making our decision. So my thinking behind this is, first of all, as far as I'm concerned, as a retail investor, and all of us as retail investors, this is not something that from my point of view, is something that I want to do now. I'm planning to do now, and I'm looking to do now. This is something I think we all look at as an option in the future, and the reason why we look at it as an option in the future is because, first of all, we want to see how everything plays out. So, best case scenario, give us our 2 days back. That happens, this goes in the bin. We don't get our 2 days back. Obviously, the 2 days is on condition that the shorts close their positions as well. We have a settlement, and we're looking at a figure in excess of $500 per share. So that would be another option. And if that is not happening, then, and all the avenues are obviously explored and not satisfying people in terms of what they want. Obviously, you've got a grey market possibility, but that is looking a little bit more difficult. So if the authorities want to approach the company, and then John Berger said he's more than welcome and more than happy to negotiate with them. If they've got anything to say, they can certainly approach the company. But what I am saying here is, if after all avenues have been explored and there's nothing left, then my position is we don't give up. So if we've continued to face the wall of silence, nothing happens, and we've got no other option, then this, as far as I'm concerned, and in my opinion, is a last resort measure. So it's a decision as a last case, last option. So it's not something that I'm advocating right now. I believe we need to have a discussion on it. So I'm planning on having, obviously, a space chat where we explore all of this. But shout out here to John Berger, who again who did understand what I was saying, and saying obviously it's very, very important to plan this if it is happening, and if any investors would like to become on board. And special shout out and thanks to all the investors who responded positively to this. Then we're not actually going ahead with this right now. We're going to wait till all avenues are explored. And remember, behind the scenes, the company are also taking their own legal actions. So this is something that is going to be after we have a decision, or after we have an outcome. So the procedure would be, we research similar cases, we have a look at what happened in the past, and obviously you need to bear in mind that with a class action, we are unlikely to get what we need, but what we must do is make them pay. So the class action could be to take on the hedge funds, to take on the brokers, to take on FINRA, trying to get some change, and that is if we are not happy. So finally, if anybody is worried, remember, obviously we still have our entitlement to next bridge. We still have the 1-for-1 share. So these actions, these litigations, and these steps that we are going to take are basically looking at why they halted the last 2 days of trading, the 10 legal cases that I've identified, because obviously it is something none of us are happy about. And the last thing I'd like to do is give a shout out here to Jose, who's posted a very interesting tweet here. He says, I am up for a suit. And basically, he's also come up with a good suggestion here. We can sue Congress for their inaction. So let's have a look at the post that he shared. And what he stated here: yes, it is possible to bring a legal challenge to Congress for failure to take action. Such a lawsuit is typically brought on the grounds that Congress has a constitutional or statutory duty to take a certain action, and if failure to do so is a breach of their duty. So this sounds interesting to me. One example could be a mandamus action in which a plaintiff asks the court to order Congress to take a specific action. These are rare and only successful when the duty to act is clear and undisputed. There have been several lawsuits there, he stated, and finally it's worth noting that lawsuits against Congress for failure to act can be difficult to pursue. So that's something we'll have to bear in mind. But again, thank you for sharing this information. And finally, thank you very much for watching. Please stay tuned.